At what age would you like to retire? How much do you want to have when you retire? Are you planning for retirement? What is a 401k? How are you boosting your 401k savings to reach your retirement goals faster? If you want to find the answers to these questions and more, then stay tuned for this episode of Fun Financial Insights. Hello and welcome to Fun Financial Insights, the YouTube channel where we make money matters easy and enjoyable. I'm your host, and today we're going to talk about one of the most popular retirement plans in the U.S., the 401k. So how much should you have in your 401k? Well, before I answer this, first let's understand what a 401k is and why it's important to you. Let's dive in. A 401k is a type of employer-sponsored retirement plan that allows you to save and invest a portion of your paycheck before taxes are taken out. Some employers also match a percentage of your contributions, which is like getting free money for the future. There are generally two types. The investment earnings in a traditional 401k plan are not taxed until the employee withdraws that money. This typically happens after retirement when the account balance is entirely in the hands of the employee. The Roth 401k is an increasingly popular option that requires the employee to immediately pay income tax on the contribution. However, after retirement, the money can be withdrawn with no further taxes due on either the contributions or investment earnings. 25% of Americans have no retirement savings. It is important that you are not part of these. So, how much should you have in your 401k to retire comfortably? And how does your 401k balance compare with others in your age group? Well, listen closely because we'll answer these questions and more using some real-life data and examples. According to Vanguard's analysis of over 5 million plans, the average 401k balance was $129,157. Now, that may look like a lot. However, depending on your age and when you want to retire, it may be a tiny drop in the ocean of what you need to survive. So what does the data say for each age group? According to Fidelity, individuals between the ages of 20 and 29 have an average 401k balance of $10,500. If you are in this group, your goal should be to make the most of the energy you currently have. Do your best possible to increase your contributions beyond 7%. Why? Well, because professional recommendation is that by the age 30, you should have an account balance of equal to 1 time your annual salary. Those in their 30s have $38,400 on average. At this stage, there's a chance your income is increasing and your responsibilities may be as well. You should avoid trying to keep up with the Joneses and spending money on things you don't really need, and instead focus on planning for the future. Now, for the folks that are in your 40s, the average 401k balance is $93,400, which is a contribution rate of 8%. Now, this account balance size for Gen Xers may reflect the fact that these folks have logged a good couple of decades in the workforce and have been contributing to plans for that long. And if you're in your 50s, the average 401k balance is $160,000, contributing rate at 10%. And 60-somethings? Well, your average 401k balance should be around $182,000 and a contribution rate of 11%. Based on this data, baby boomers may be too aggressively invested. Workplace plans savings-wise, it's now or never for this group because a lot of people tend to retire in their 60s. This contribution rate suggests that they are using their workplace plan to add as much as possible to their retirement savings. Now, looking at folks that are in their 70s plus, the average 401k balance should be around $171,000. Not everyone would like to stay working into their 70s, but the economic uncertainties has led to those currently working or running their own business to add up to their retirement savings so that they can cover the health emergencies and brace against inflation and increasing costs of living. As you can see, the older you are, the more you tend to have in your 401k. This makes sense because you have more time to save and benefit from compound interest, which is the interest earned on your interest. However, these numbers are just averages. They don't tell you much about your own retirement readiness. To figure out how much you should have in your 401k, you need to consider your personal goals and circumstances. And next up, we're going to talk about how to calculate the amount you need to save periodically to meet any retirement amount you set for yourself for a specific age. However, if you're enjoying this video and finding it helpful, please hit that like button and don't forget to subscribe to our channel. Now, one way to calculate your 401k savings goal is to use a savings goal calculator, which can help you estimate how much money you need to contribute each month to reach a specific amount by a certain age. For example, let's say that you're 35 years old and you want to have $1 million in your 401k by the time you're 65. If you currently have $50,000 in your account and you earn $60,000 a year, you contribute 10% of your salary to your 401k and your employer matches 50% of your contributions up to 6% of your salary. You expect to earn 6% annual rate of return on your investments. Using the savings goal calculator, you can find out that you need to contribute $1,021 per month to reach your goal, assuming a 2% annual salary increase. Your employer's match will contribute $180 per month, so your total monthly contributions will be $1,201. By the time you're 65, you'll have $1,003,159 in your 401k. Of course, this is just an estimate, and it doesn't account for inflation, taxes, or changes in your income, expenses, or investment returns, but it gives you the ballpark figure of how much you need to save and invest to achieve your retirement goals. Now, if you're not on track to meet your 401k savings goals, don't worry. There are some simple steps that you can take to boost your retirement savings and secure your financial future. One thing you could do is increase your contribution rate. Even a small increase can make a big difference over time, thanks to compound interest. For example, if you increase your contribution rate from 10% to 12%, you can reach your $1 million goal in 28 years instead of 30 years, assuming the same scenario as before. You could also take advantage of your employer's match. If your employer offers a matching contribution, make sure you contribute at least enough to get the full match. Otherwise, you're leaving free money on the table. For instance, if your employer matches 50% of your contributions up to 6% of your salary, you should contribute at least 6% of your salary to get the maximum match. Another option is to consider making catch-up contributions. If you're 50 or older, you can contribute an extra $6,500 to your 401k on top of the regular limit of $19,500. This can help you catch up on your retirement savings and reduce your taxable income. Reduce your fees. Now, fees can eat into your 401k return and lower your balance over time. Check your 401k plan fee disclosure statement and compare it to other plans or investment options. If your fees are too high, consider switching to a low-cost plan or investing in index funds or exchange-traded funds, ETFs, which typically have lower fees than actively managed funds. Also, diversify your portfolio. Diversifying your portfolio means investing in a mix of different asset classes, such as stocks, bonds, and cash, that match your risk tolerance and time horizon. This way, you will be able to reduce your exposure to market volatility and optimize your returns. You can use a target date fund, which automatically adjusts your asset allocation based on your expected retirement date. Or you can create your own portfolio using 401k asset allocation calculator. A 401k is a great way to save and invest for retirement, but it's not enough to just set it and forget it. You need to have a clear goal, a realistic plan, and a consistent strategy to grow your 401k balance and achieve your retirement dreams. If you enjoyed this video, please take a moment and leave a comment below and let us know what you found most valuable in this video. And don't forget to hit the subscribe button so you don't miss out on any of our future videos. Thanks for watching, and I'll see you next time.